fellow traders, new traders, traders to be, current subscribers. If you haven't, please think about liking and subscribing this channel if you found anything that helped you trade this week. Okay, so first one here we've got is Tesla, TSLA. That is going to be our first ticker this week. We're recording this about a day late because if you do watch the markets, you know that we had a huge gap down for all major indices. The Dow Jones down over 1,000 points on coronavirus outbreaks in Italy, further expansion in China, and we wanted to see where those all settled before we started in and made a new watch list. We're getting some rebounds this morning, which proves well, but again, we're in the midst of a possible epidemic, so we are looking at some early distribution. Remember, there are only 4 stages to every security. There is accumulation, there is the rise, there is distribution, and then there is the decline. Those are the same 4 stages for every security. They can be broken up, but we looked as we are now in early distribution. Not confirmed yet. This is still considered the rise, but this could be the first stages of early distribution. First one we got here is Tesla, which is it found support around this 819.19 level yesterday, which, had I been recording this Monday, would have been our price target for today. 859.94 would have been our breaking point. We want to see action below that for a support level of 819.19 or 1899. And right now we are looking for, well, the market's up, so we're looking for longs, and if we want to get in a long, we want to see an entry above 859.94. Target is going to be 913.06. Now remember, we've still only got a $57 expected move this week, so from 837 that brings us up to around 890, so we probably won't see 930.06. So I'm going to rescind that, and we're going to say our first target is 890. That's for the upside target. For shorts, which appears much more likely, maybe not for the rest of this week, we want to see entries below 859.94. And if you're looking to swing, I'd wait for a close at the end of the day below 859.94. We want to see some weak volume, definitely more selling volume. We want to see the selling volume continue to increase, but entries below 859.94, and we're going to say a target of 819.99, which still falls within that $57 expected move from Friday's close. Alright guys, that does it for Tesla. We'll jump on into the next one. Alright, next one here is Shopify. This one is triggered for a reversal to the downside. We can see we got a majority of that move already, bringing us from our Friday low of around 511 down to 490.96, which is our current closing point. This is already back up to 502, but for longs we want to see this get back above 507.40. Back above 507.40, we could be looking for 529. The expected move that we are looking at for this week is $31. We've got a high implied volatility in this. That's because of the sharp drop. It has rallied much higher. You can see we got 75% right there, so that's pretty strong. That's a pretty strong move that we've got left hanging around here, and not a lot of activity in the call side. Much more activity on the put side, which leads us to believe that this rally could be short-lived. The longs, we're looking for a rally, a close above 507.40. If you're a little more risky, you could get in above 507.40, look for that to hold, and let it move its way back up to 529. With the sell-off though, definitely don't think I'd want to hold any longs over the night. So, of course, assess your own risk, and that's up to you. Upside target 507.40 going to be our entry from 590.96. That subtracts about $18 from our expected move. Again, our expected move is $31, so that only leaves us about $12 left of expected move, which tells us that 529 would be a decent target for an upside target. So 529. For shorts, I want to see it stay below 507.40. Below 507.40 with an entry below 495. Okay, so downside target. I'm going to say it's 466.78. Remember that we're in the early stages of distribution, so early stages of distribution is just another fancy word for a ranged zone. That does it for shop. Let's move on to the next one. Alright, so our next one here is XOM, ExxonMobil. I know nobody's looking at gas right now, which is exactly why that's where I want to be looking at it. Exxon, this week we've got a $1.76 expected move. It has made that. It made that yesterday. It was down about $2.60. You can see from our low here, which was 58.79, closed at 56.36. That's about $1.60. And what's more important to look at, which everybody should always be looking at, is our monthly chart. So our monthly chart has fallen to the lowest level of support on this, which is 55.94, which means Exxon could technically, according to our support levels, fall a little lower. 55.94 being that lowest support level, but this is our monthly chart. What makes Exxon a little scary here is that this long-term trend line and channel it has finally fallen outside of it. So we are trading outside of the trading trend for the entirety of Exxon's existence. So does that mean it could fall lower? Absolutely. For shorts though, I'd want to see it below 55.94 before I decided to get into any more shorts. Below and a close below 55.94. For longs, however, hold that current level, which is 55.36. Hold 55.36, and we could be looking for anything as high as 58.07, which would be about $1.70 expected move. $1.70 plus 56.36 is 58. 58.07 is going to be our upside price target. Remember, we've only got 3 days left for this to happen. Volatility is expanding. We'd want to see that volatility contraction before we have a confirmed long, but that's what makes this a great trade. Exxon is expected to revert back to its mean as far as volatility is concerned, and that means upside movement for us, which means quick, easy profits for short-term option trades. So, for longs, entry above 55.40. Oh, sorry. 56.40. Target 58. For shorts, entry below with a close. That's important. We want to see a close below 55.94, which is our monthly support. Get a close below that 55.94, and we could be looking for, let's say, about 53.50. 53.50 falls within the lower end of the 1 standard deviation move for the week, and that is going to do it for Exxon. Remember, Exxon might not happen this week, but this is a fantastic security to watch into the following weeks. Exxon is going to pay out. Believe me when I tell you that. Let's move on to the next one. Price of one, Zoom video. If you caught this one with me, I think this was maybe a couple weeks ago. I had you getting in back down here around this 87.26 level, maybe it was the 88.72. I hope you caught it with me. Go back a couple watch lists, you'll see it. This was a beautiful breakout. I know I had a couple followers on StockTwits that definitely caught this with us. They were more psyched. They were even more excited for my next watch list. So this one, Zoom video, looks like we could be experiencing a double top. And there's our Eve. This is our Adam. That's the double top. That's not a very good line. Sorry about that. Let's see if maybe I can draw a better line for you. So yeah, there's our Eve. There's our Adam. Even Adam double top. That's gonna be a sign for the reversal. This one is triggered for a reversal, and we've got a sharp move to the upside. Volatility expansion. We expect that volatility to contract, revert to its mean. Reversion to the mean means coming back within our range, and this is triggered for a reversal to the downside. Okay, so we've got an $11 expected move this week on this puppy, which is right there. You see we've got huge implied volatility, which only wanes as we go further out into the option chain. See, it drops down to 20%, which means we're looking for a pretty sharp move this week. You can see that happened yesterday. Gap down with the rest of the market, but bought back ferociously, just ferociously. One of the few in the NYSE that was bought up just this way, which means that we could be looking for continuation higher. Now remember, from our close, which is 101.76, we're up 501, which gives us still another $6 to the upside. It did make that yesterday, but that doesn't mean that the range is complete. So we can still be looking for a retest of 111 to the upside. We'll say 110.75. It's going to be our upper resistance level and price target for. But we want to see 104.11 hold. So we want to see 104.11 hold, price target 110.75, below 104.11. We're looking for 98.09. First target, of course, 101.76. So for longs or call entries, whichever you prefer, 104.11. That's our entry point. Target 110.75. For shorts, entry below 104.11, and we've got a first target 101.76. Second target's gonna be 98.09. Alright, that does it for Zoom. Let's move on to the next one. Alright, so our next one here is 3M Company. So we've fallen down to a pretty critical level. Let's bring this out to our monthly chart to check that out. Alright, so you can see that our long-term trend line and channel for 3M, of course this is an uptrend, higher highs, higher lows, and we can see that we've fallen to the middle of this trend line, which is a very critical area for 3M. This is going to be a deciding factor whether we decide to fall lower or fall higher. You can see this was a pretty critical support level for the takeoff and the breakout above this fourth level here, and we need the 150.36 minimum to hold. We'd like to see above 154.04 or 05 to consider getting into some longs, at least on the monthly. Let's bring this back down to a year chart and we can discuss our current entry levels. Okay, so 154.05, that's going to be our support level. You can see that's right where the intersection happens, which is a what the hell did I just do? Okay, so that's, you see that is pretty critical area right there. We're currently below it, which means we could fall down to 150.36. We still got a $5 expected move on this week, but if we stay below 154.05, then we're looking for 150.36. Above 154.05 though, and we are looking to retest some of these highs. Let's zoom in and see if we can find a nice price target for us. Alright guys, so the longs. Entry above 154.05. Target, we're looking at 156.93 with the second target 158.59. For shorts, we want to see it stay below 154.05. Downside target is going to be 150. Alright, that does it for 3M. Let's move on to the next one. Okay, so our next one here is J. This one is triggered for a reversal. Now this reversal needs to confirm, so we need to see below 172 for shorts. 172, which is also what we consider the start of a new trend, or a new trend line. And anyways, we've got 1 and 2 points. If that level holds, and we're looking for some higher movement, we can see that this was our old trend, 1, 2, 3, 4, 5, and then finally a break right there. So this was a confirmed trend line, which it has broken into. This has now become a bull flag, or what you can consider the start of a bull flag. 172 is going to be that critical area that we need to hold. If it can't hold, then we're looking at 99.04. If it does hold, then we're looking to retest old highs, 104. Take a look at our expected move this week, and now J has got some 24-day options, which typically I don't like. We're looking at about $6 expected move in the next 20 days, and we're looking only for 3 days left, or 3 days of movement, which brings us to maybe about $1.50 expected move, which bring us down to about 140 from the close yesterday. So 140 doesn't even break below that 172. You can see that's why it is so important that 172 breaks to see 99.04. For longs, 172 needs to hold, and we're going to say 103 upside target this week. For shorts, entry below 172, target 99.04. Alright, that does it for J. Let's move on to the next one. Alright, STMP. This one I could have recorded Monday, absolutely, and because it didn't gap down, which was surprising to me. 159 was the support level we're looking for to break for a target 151.07. Looks like we could still get that, which leaves us about $4 left in in this security, but I wouldn't expect it to go too much lower. STMP is a rocket right now. Got about a $13 expected move from Friday's close. It definitely has made that 174.47 down 20 points, which means that 151.07 could definitely be a nice support level for this to start some distribution. Remember though, we are still in a rise, so this gap higher usually means we're going to find support around 50% retracement of this candle, and we're going to bounce around there for a while. So the longs, if you want to get long back into this and see if there's any more to ride to the top there, I want an entry above 159.70. Target old highs, which we'll say right now, we'll say 172.89. If you wanted to ride it back to the top, we'll just say 172. For shorts, which has already been triggered below 159.70, target 151.07. Now another thing to consider is that when these gaps happen, it always retraces, or usually, I shouldn't say always, but usually retraces 50% into the starting candle. So let's see there. So a 50% candle brings us to about 143.13, which means this could still fall another 12 points, which is what the options market is still expecting for the move. So we could definitely see 143 this week if the selling pressure is there. We can see that we get some strong buying pressure, so it really needs to break below that 151.07 if you want to start seeing, even thinking about getting for 143. Right now 151.07 is my price target, which is about $4 on STMP. Won't give you quite 100%. These options are pretty expensive, but nevertheless, it could still happen. This one ran up pretty fast, and again, the 50% level is a pretty good target for gaps. Alright, so let's move on to the next one. Alright, so our next one here is Sprint Corporation. Great runner, just the same as STMP. Ran, gapped, ran, and is continuing to run, but we've broken below that 984 level, could not get back above it. That's the lower support level we're looking for to break for a short down at 930. Sprint options, not expensive. You can look at this, very cheap. That 930 level comes this week, then you're looking at definitely 100% return on your money. Another thing to take a look at over here, which I try not to show often because this indicator is pretty useful. We see a huge decrease in options over here. A lot of calls being exited. Still got some heavy volume here, so nothing too serious, but we've got a lot of ads. 9 being a lower support level means we're probably not going to see 9, but 930 not out of the question. Got a 45-cent expected move, which brings us down to about 940, which is just about 10 cents above our price target. This one is triggered for a reversal to the downside, and the entry has already been confirmed. So we'll watch price action today. If it can stay below at 994, then I'd definitely be looking for an entry in. So for longs, entry above 984. If you're risky, you can get in and use 984 as your stop out. I would be waiting till the end of the day and waiting for a close above 984. Maybe in the last 15 minutes, if it looks like it's going to close above, I'm going to get in, swing it for tomorrow for a rise up. But I don't think that's too likely for this to happen. I'm looking at a $10.30 price target. It's got about 45 cents. 45 cents brings us around 10.30, more like 10.25, but that works for me. $10.30 to the upside. Shorts. We've already got triggered. 984 below with the close. Exactly like what we like to see. So we're going to watch price action today and see if it can stay below there. If it can stay below 984, then we've got a target of 930. And this one definitely looks promising to me. I'd be looking to get into these 10s, maybe even the 950s for, looks like, we'll say 10 cents. Get in at 10 cents, ride this down to 30 cents, and well, let's see, that gives us a delta of 26. That's, and we're looking for about half of that, so that's that 13 cent return. 13 cents on 10 cents is 130%. That would be great for me. This one looks like the most promising that I've found so far. Of course, some of the bigger ones, Tesla definitely looks great. Thank you for watching. Please like and subscribe. This is Optional Enterprises. I'll talk to you next week.